What's up, guys? Welcome back to Swing Trading and Coffee. There are three Tesla headlines from the last couple of weeks that almost nobody is connecting the dots on. And together they completely change how we should think about Tesla going into 2026. Number one, Tesla just opened the largest, almost off-grid supercharger station on Earth in California, and it's powered by solar and Megapacks. Number two, Elon's AI company xAI is quietly becoming one of Tesla's biggest energy customers, dropping over $375 million on Megapacks for its Colossus supercomputer. The third point is Europe. Europe is both Tesla's biggest headache and its biggest wildcard. Full self-driving ride-alongs are starting. Regulators are literally telling Tesla to just stop spamming them about it. And sales are getting smoked almost 50% year over year. So in this video, we're going to zoom out and answer three big questions. Number one, what actually changed for Tesla in just the past couple of weeks? What does this xAI Megapack deal really mean for Tesla's future, especially the energy business? And where does that leave us for a realistic 2026 target? Also, at the end, I'm going to analyze for you the Tesla chart and give you my short and long-term price targets. If you're a Tesla fan, this is one of those make a coffee and watch to the end. If you're a skeptic, this might at least help you understand why people are still paying crazy multiples for this thing. All right, guys, let's get into it. Quick disclaimer before we get into this is not financial advice. This is only for informational and educational purposes. So what really happened to Tesla in the past 2 weeks? Let me give you a rapid fire kind of like snapshot of the newest narratives. Number one, full self-driving 14 now has a free trial in North America, as you've heard. It's for full self-driving 14.2 for owners that have hardware 4. And early reviews tend to suggest that there's higher miles per critical disengagement. And that's kind of like, when the driver or the person sitting in the driver's seat has to actually intervene. So there are much less disengagements on that. Now, we're talking thousands of miles between interventions instead of a few hundred. So this is actually a much bigger leap than what we've had in the past. The second thing is full self-driving in Europe, ride-alongs and the regulator drama. In Europe, they're starting full self-driving ride-alongs in places like Germany, Italy, and France. So regular people can sit in the car and watch full self-driving navigate cities with a human there still to take over if needed. At the same time, the Dutch regulator RDW is saying, yes, there is a February 2026 demo target, but no, approval is not guaranteed. They're saying to Tesla, we are not in a hurry. We want to know that this is really safe before we get it on our roads. And they literally told the Tesla fans, like, stop pressuring us, your emails don't matter. Stop spamming us about it. Number three, let's talk about the Europe sales slump. So at the same time, Tesla's European sales are down almost 50% year over year. That's in October. While EV sales overall in the region, they actually grew. Market share dropped to about 1.6%, which is not great. So you've got this weird combo. Europe is key for full self-driving approvals, but the car side there is, struggling. Let's talk about energy and charging. So you have the Lost Hills Supercharger Oasis. In California, Tesla just opened the world's largest supercharger hub in Lost Hills. It has around 164 stalls, 11 megawatts of solar, and about 39 megawatts of Megapack storage. So the station can run almost completely off-grid, and it makes you think, really about the future if this is something that's going to be, all over the place. And then you've got xAI, Elon's AI startup turning into a huge Tesla energy customer overnight. So let's break this down. 168 Tesla Megapacks already installed at the Colossus supercomputer data center in Memphis. Okay. Just for a little bit of background, if you're kind of new to what Tesla is doing, Colossus is a supercomputer developed by xAI, and construction began in 2024. And the operation actually kicked off in July of 2024. So more than a year now. It is currently believed to be the world's largest AI supercomputer. This is Elon Musk we're talking about here. When he does stuff, he goes, absolutely bonkers with it. So he's, building the most impressive supercomputer to power AI in the world. And he's obviously doing this to further X and to be competitive with OpenAI. Now, it's the purpose of Colossus was to train Grok and to support the social media platform X. It also supports operations for Elon Musk's other companies, such as SpaceX. Okay, so we talked about the 168 Tesla Megapacks already installed, and then now there's an additional order for more than 375 million of Megapacks for Colossus 2, also going to be developed in Memphis. Along with that, they want to put together an 88-acre solar farm planned next to the site to feed the system. That's just the past couple of weeks. So is Tesla still just a car company? Or is it quietly becoming the power plant and software stack for AI? We'll circle back to that in a minute. So just keep that question in the back of your head. Now, let's talk a little bit about psychology here. Before we get into the full self-driving and xAI in depth, I want to do a little mindset thing with you. Most people watching Tesla either are completely married to the stock emotionally and they can't see risk when it comes. Or on the other side, you have people that hate Elon Musk so much they can't even see the opportunity in Tesla. Now, if you actually want to trade this thing, either as a swing trade or, maybe as an investment even, you need to be in the third group. I like the upside, but I respect the downside as well. So don't let your biases, fool you. Just keep watching what Tesla's doing, their growth path, and if they're, what the setbacks are. Now let's circle back to the full self-driving. So like I was saying, community trackers are reporting big jumps in reliability. We're talking thousands of miles of per, oh crap, I need to grab the wheel instead of a couple hundred miles like version 13. Now, is it perfect? Absolutely not. Is it full level 4 autonomy? Also no. Not just yet. Very close though. But what matters for evaluation is behavior. So when you give people a free trial of something that feels magic and slightly scary, you'll definitely remember like your first time in a full self-driving vehicle, seeing that steering wheel move around and weaving in and out of traffic. So people fall into two groups. The first one will turn it off and just never touch it again. Freaks them out. They don't trust it. But a second group of people and a meaningful chunk of people will get hooked and they will not want to go back to driving without it. That's called loss aversion. Once you experience a higher level of convenience, losing it almost feels painful. And, you can't unsee this. So once you've watched a car handle, city streets, like unprotected turns and highway merges, 95% on its own, your brain starts to, move from, okay, Tesla's an EV company to actually an AI company on wheels. Now, that is important because it gives us different multiples based on the story. Now back to the flywheel. So more people are using FSD. You got more training data. Now you have better full self-driving. You have more signups, and you have that free trial to lure people in. This is a classic software flywheel, not an auto flywheel. Okay, so short term, this doesn't fix the fact that earnings are compressed and margins have come down, but long term, if full self-driving adoption really ramps up, it justifies seeing Tesla as part car company, part software subscription, part robotaxi option. And that's leaving out the Energy and the Optimus, okay? And that's where some crazy valuations can come in. Now, back to the Europe situation, because this is one of the key risks for Tesla. I think they will eventually nail it, but if it gets drawn out too much, it may, upset investors and, keep them away. So now circling back to full self-driving in Europe, just one time again. So there's a kind of like a gatekeeper risk here. Tesla is running, full self-driving ride-along events, and like I said, Germany, Italy, France, and the car comes to you with a chaperone, and you get to experience it. And they're targeting February 2026 to demo the full self-driving to the Dutch regulator. Now there is a little twist. So Tesla framed it like, yeah, we're getting approval in February, and the Dutch basically came out and said, we didn't promise approval, we're just evaluating. Now Europe is saying we might allow your self-driving tech, maybe, but we're not in a hurry and stop, trying to game the process. And consumers are saying, we have a lot of EV choices now, and we're, not necessarily locked into Tesla. This is important for your mental model of Tesla. If full self-driving gets EU-wide approval, via the Netherlands, that is a huge, huge upside unlock, because that gets the first full self-driving vehicles on the road in Europe. If it gets stuck in regulatory mud for years, Europe turns into more of a slow competitive grind. And we're going to get into Asia in a little bit. When we look at long-term valuation models, Europe is one of those levers that really separates the bear path from the bull path. It's pretty important, and it is a risk that you have to watch out for. All right, now let's just circle back to the xAI Tesla Megapack deal. What does it really mean for Tesla? So we had the Colossus 168 Megapacks, and they decided to make it more environmentally friendly. And there is a reason for this. It's not just about, saving, the environment. So the Megapacks, what they do when you're running a really big data center is it helps to smooth out the power demand spikes from all those GPUs. So it acts kind of like a giant battery buffer for the grid. This came after a big controversy where xAI was using dozens of methane gas turbines on site without proper permits. And that triggered lawsuits. So the Megapacks here are not just green tech, they're also a political and regulatory shield for Tesla. Now, Colossus 2, that's the 375 million Megapack order. So why did I circle back to this? I want to stress a point that xAI is turning into a flagship customer for Tesla Energy. And here's the important part. Elon basically owns both sides of the trade, and I know some people may have some mixed feelings about that, and I'm totally understandable. But he controls xAI, which needs insane amounts of power and storage. He controls Tesla, which sells Megapacks, runs solar, and is positioning itself as the energy backbone for stuff exactly like Colossus. That is an internal flywheel. That's our second flywheel, right? The more xAI builds, the more Tesla Energy sells. So the more Tesla proves the tech at Colossus, the easier it is to sell Megapacks to other data centers chasing after AI. If the AI boom continues, Megapacks might become AI infrastructure, the same way GPUs are AI infrastructure. And that's how Tesla, even without selling an extra single car, can grow revenue through energy and AI adjacent infrastructure. Now, where does this leave the car business? So let's not forget underneath all the narratives, Tesla's still a car company with car company problems. Right now, we got Europe, 50% year over year in October down. And actually, let me tell you, I had 2 trips to Asia this year. One was to Thailand and one was to Vietnam. And I maybe saw 1 or 2 Teslas in Bangkok. That's it. But aside from that, I'm seeing BYD. There's another company called MG. They make some impressive looking cars. I don't know how well they perform, and I'm going to bet that their technology is behind Tesla. But I rode in a few. They're using them in their. They have their own version of Uber there called Grab. So most of the drivers are using it. So this is kind of like an untapped segment for Tesla, and they're losing market share in Asia. And this is mainly because Tesla is getting intense price wars and strong local competition. Let's be real here. Tesla's share price, it's not justified by its current earnings. It's being justified by a story about the full self-driving, robotaxis, Optimus, and now this xAI Megapack energy infrastructure collaboration. That's where people either say this is completely insane, it's a bubble, or no, this is Amazon in 2010. They were not making money for a long time. Just pay the multiple and wait because you're betting on growth. So you got to ask yourself, do you believe that Tesla will grow or not? Do you think Tesla will fail at one of these things I mentioned? Are they going to fail at most of them? Let me know in the comments. I want to hear your opinions. So let me lay out my bull case scenario for Tesla as an AI plus energy infrastructure plus robotaxi play. And this is my long-term projection to 2030. Sounds like it's far away, but 2025 is wrapping up. That's 4 years. 2030 is not that far. So here's the fun part. In the bull case, we can assume, real quick here, because I don't want to bore you with numbers, revenue compounds at 25% a year, net margins climb to 22% by 2030. That's if you have strong full self-driving adoption. Robotaxis are operating in multiple cities. Optimus and other automations start contributing, and then you have the energy and the Megapacks riding the massive AI data center boom. They're going to need ways to stabilize their power. In 2030, in this scenario, we would put us at revenue roughly about 290 billion, net income about 64 billion, earnings per share $19 to $20 per share. That gives us a 45 times PE, pretty high, but not insane if the company is still growing and viewed as an AI and energy infrastructure giant. You could roughly get $870 per share in 2030. Now, give or take, and this is completely speculative. I do not have a crystal ball, but this is what I think could happen if they move in the direction they're stating. Now, for 2026, I'm leaning more towards about $600. However, there are short-term targets, which I'm going to discuss with you right now on the chart. In a bull scenario, 2026, somewhere near 600 is reasonable if everything goes mostly right. Full self-driving scales, or they have some kind of big breakthrough. Europe doesn't block it. xAI and the AI data centers buy Megapacks like crazy. And then they execute on their robotaxis on energy, then they could be doing pretty well. And they will have a lot more cash in hand for Optimus. The market is already betting on some version of the bull story, maybe not full robotaxis everywhere, but definitely more than a car company. Where you land here probably comes down to, do you believe that full self-driving actually works? And does it work well enough to be widely adopted? I think so. And, there are lots of videos of people testing these vehicles now in crazy conditions, rain, fog, snow. you can see it for yourself or even experience it for yourself and decide. It's getting very impressive. Full self-driving now is not what it was just a year ago or 2 years ago. They've made some big leaps. So now let's go to the charts so I can break down for you how I am trading this. All right, so first we're going to start out with the daily chart. And as I discussed in my previous videos, we have this point of control here. That is the highest volume area where most of the trading occurred during this time frame from September till today. This had acted as kind of like a support, but now we are below it. Then you got this trend line down here, which I put down a couple days ago, and it's chopped through it twice, but it is actually holding. You have this also purple box here. And the reason I have this is because this was overhead resistance. And the good news, if we zoom in a little bit, give you guys a little bit closer look, we have not only cleared this resistance level, we have also cleared the EMAs. And for the EMAs, I have the 13, the 21, and the 50. This is what I use for my swing trading analysis. Usually when I play stuff 1-2 months out, maybe even 3 months out. So it's starting to look constructive. And also I want to bring to your attention the 490 zone. So I'm going to pull up here a quick screenshot for you. This is the multi-expirations for Tesla. This is on the options side. And you can, when you look at the options, you can get some clues on what zones may actually be defended or not. So these are the next 4 expiry dates on the options. The one that I'm really looking at here is the one on the bottom right hand corner, which is December 19th. This is the 3rd week on the options of the month on the monthly, and this is usually what I trade. I don't do the weeklies much. And the reason for that is typically institutions will buy a lot more of these and traders as well. Now, what are we using this data for here? So if you look at the $500 level, you'll see that there are a lot of calls stacked. And this is what we refer to as a call wall. And what it does is it can act as a magnet, pull it upwards towards that price, and then afterwards it becomes resistance. So we tend to see a lot of times that a share price will get pulled up to it and then it will reject, but it could also rip through it. But for me, as somebody who is swing trading this, I am playing the conservative target of about 490. Now let's look at the second screenshot. In the second screenshot, we got the implied volatility by the open interest. So if you look here, where everything is stacked is about around the 502.50. So it kind of matches up with the previous screenshot. So, all right, let's get back into the chart here. So we said about 490. I have it marked down here. All right. And we want to zoom out a little and see 490 is actually the previous high. So it kind of makes sense that the safe play for people that are trading this is once you get above this point of control here at 434, we did have 2 green candles above the EMAs, and the EMAs are curling upwards. So that is good. It is technically a confirmed long here, but it is still a little early because we didn't have the best volume. Let me expand here some of the indicators I have. MACD is just barely flipping green, and that looks good. The RSI, kind of like in the midway, we're not getting momentum very much yet. But once volume comes in, it's going to start looking better. So if you look here at the volume chart, look at these past, Friday was a half day. But even before that, the volume is still below this this line here. And what this line is like the 20-day average on the volume. If you're above the 20-day average, that above that line, it tells you, okay, we are, a lot of people are stepping in to trade this. And if it's moving up, it's going to just propel it forward, but it is laying kind of flat right now. So what does that mean? It means that I just want to wait for confirmation. And also you guys have to keep in mind, will the market hold or not? We're at a very critical point at the market. On the SPY and the triple Qs, we are at a trend line and we're just barely touching it. And that's where we closed. You can see a complete breakdown of that in my previous video. So, assuming that, we don't have a disaster in the market, and, I think Tesla held up really well. It came down a little bit and it bounced back up right away. So I think there are buyers, and people are just holding. They don't want to get flushed out. I'm sure some people did, but anyway. Now, if we do get up to the 490 zone, I'm likely going to be out for a bit, or, sell the majority and get back in. This is different from my long-term thesis. I trade it, but I also have a long-term thesis on it. So if you zoom out a little, I want to show you this upper yellow line here. And maybe if we switch to the weekly, it would be easier to see. So back here in November of 2021, this was where it began. And then we have this second one here, second top. So I would not be surprised if we come around here, maybe 520-ish, 540. It could happen next year, early next year. So probably in Q1, we could tag this if things play out. And then, like I said, $600 price target for end of year 2026. All right, guys, so that wraps it up. Let me know if you found this video helpful or if you learned anything from it. Also, let me know if you agree or disagree with my analysis here on Tesla. Also, this channel is about 3 months old now, and we have over 1,000 subscribers, so we're getting nice traction. If you found this helpful, give me a like and subscribe so you can help me grow this channel. I will see you guys soon in the next update. Take care.